Welcome to FAC 1501, Semester 1 of 2019. I welcome you to this module, quite a very informative module with the fundamentals of accounting. It's very essential that you understand this module very well, because you're going to carry the fundamentals and the principles forward to the subsequent modules. For those ones who are focusing on accounting, you're going to see the same thing with 1502. You're going to see the same thing with 2601, 2602, 3701, 3702, 3703, and then your 3704. So it's very important that you understand these fundamentals very, very well. For today, we are basically going to focus on the assignment and work out the solutions for the assignment. As the first upload that I'm going to do today in a series of uploads that I'm going to do, is I will be assisting you with the module until you write your finals in May and June. So we are going to do assignment 1. That's for your 2019 semester. Yeah, for your 2019, yeah. So your assignment 1 starts with, in actual fact, how many questions does it have? It has 15 questions. It has 15 questions, and let's start with question number 1, which is question number 1. It says the following statements relates to the activities that may or may not form part of the processes followed in the financial accounting. Okay, we have part A, which is identification, part B, which is recording the monetary value of the economic events so as to provide a permanent history of the financial activities of the entity, communication of the recorded information to interested users, the calculation of profit made by the entity, and then the employing of an accountant. So the identification is correct. The recording is also correct. The communication is also correct. So ABC. So we need to look for a solution with ABC. So for question number 1, a solution with ABC is solution number 3. So we have solution number 3 there. Solution number 3. For question number 2, as we proceed, the following are the statements regarding assets and liabilities. Assets increase on the debit side, that's correct. Assets will be classified as current when it is expected to be converted into money in the entity's normal operating cycle, that's correct. Liabilities are resources controlled by the entity. No, they're not controlled by the entity. Because the moment we say controlled by the entity now, we are speaking about assets. So that is wrong. A liability is a present obligation of an entity as a result of the past events and present past events, and represent a potential outflow in the cash of the entity. Yeah, they are liabilities, so that's correct. I mean their obligations rather, that's correct. A liability forms part of the owner's interest in a business. No, that's not correct. Part of interest now, it's equity, so that is wrong. So A is correct, B is correct, C is wrong, D is correct. So we need a solution with A, B, and D. Do we have that there? A, B, and D, which is solution 4. So our solution here is solution 4. Go on, question number 3. You see, with all this, there are no workings. We just like going through the theory. Question number 3. The second step in the output stage of the financial accounting cycle is this. We have 1, extracting of a trial balance. It's not the final step. Analysis and interpretation of financial statements. That is the second last step. So we have our solution here. A solution 2, question 4. We can quickly rush through this or browse through this because Vela, that's the beginning of your study guide, and those are the basics. No calculations involved. You just read through. The following statements may not relate to the characteristics of a sole trader. Entity belongs to one person only. Yes, that is true. Decision regarding the entity are taken by a sole trader only. Yes, that's true. So A and B is fine. Profits and losses of the sole proprietorship are shared equally between the sole proprietor and his family or members. Wow, that's shady. That's not true. Well, ultimately, obviously, they will share within the family if you really conceptualize and think about it. But those are not like the fundamental principles that defines a sole trader from any other company, because even members of a public company ultimately share their resources with their families. So I don't consider that. The profits of the entity are not taxed in the hands of the sole trader. That's wrong, because if you are a sole trader, at the end of the day, the income that you're getting is part of your gross income that should be taxed in your own hands. Then E, the sole trader is the disposer of the assets of the business. Yes, as the sole owner, you are also the sole person who can dispose or acquire assets. And then so A, B, and E is correct. So do we have A, B, and E? Yes. So 4 is solution 2. Solution 2. We'll go to question 5. Which one of the following is not a current asset? Yeah, that's a nice question. Easy as it comes. So assets are resources owned and controlled by the entity. We have trade inventory. That's an asset, current asset. Trade receivables is a current liability. So question 5, we have trade inventories, that is a current asset. Trade receivables, it is a current asset. Forgive me. Accrued expenses, those are expenses that we have incurred but we haven't paid, so that is a liability. Prepaid expenses are assets, cash flows are assets. So our solution is solution number 3 there. Solution number 3, which speaks about accrued expenses. Then we continue now to question number 6. Question number 6. Which of the following options influence the above transactions? Alright. Bought equipment on credit. So our assets are going to be increased. So we're increasing an asset with 8,000. That's correct. And then our liabilities are going to be increased by 8,000. Nothing is going to happen to our equity. So we do have a solution 4. So question 6. Solution is what? 4. We go to question 7. This is question 6. Question 6, and then we go to question number 7. We're almost done, I guess. Which of the options listed below represent the correct analysis of the transactions above? Not VAT registered and made a donation of that to a primary school. Donation is an expense, so our equity is reducing by that 4,000. And what do we donate? We donate cash, so our assets, which is our bank, is also reducing, isn't it? So we need a solution where our assets are reducing and our equity is reducing, isn't it? So we're what, question 7? We have donations, which is reducing our assets, reducing our equity. Reducing our assets, reducing our equity, and then nothing. So which one is it? Donations, bank. We're reducing our assets by 4,000. We're reducing our equity by 4,000. So our solution is number 3. Solution 3, isn't it? Because our donations are there. They are reducing. Okay, let me look at this correctly. We're debiting our donations and then crediting our bank. No, that's correct. So then we go to question number 8. Which one of the following entries will be made in the general ledger of stolen traders? Because they withdrew 3,500 rather. So those are drawings. Drawings reduce equity. So they are debited. You debit drawings and then credit bank. So we want where our bank is credited and our drawings are debited. Solution 5. So we have here our solution number 5. Then we go to question number 9. We're given an amount of that with VAT 14%. We're calculating the VAT exclusive amount. So the principle is when you are given VAT as 14%, an amount exclusive of VAT is equivalent to 100%, right? If you add 14 plus 100, it will give you 114%. So an amount that is inclusive of VAT is equivalent to 114%. So whatever amount that you're given, you need to determine that is it inclusive of VAT? Is it exclusive of VAT? If it is VAT inclusive, you use this as a denominator. If it is VAT exclusive, you use this as a denominator. So the amount that we're given is VAT inclusive. So we're going to take this as our denominator in our calculations. So we are looking for VAT, which is 14, over the denominator of 114 multiplied by, how much is it? 2850. How much is it? If you look at these calculations quickly, you get to realize that it's going to be what, 2,500, isn't it? So for our 9, the solution is equals to 4. I hope you are going to follow that. So we say this is the denominator because we were given that, which is inclusive of that. We are looking for that, divide by that, multiply by the amount that we're given. We get that. So that is the amount that is exclusive of VAT. So let's proceed to question number 10. Question 10. Question 10. The following represents the total. Which one of the following represents the total sales? You are given sundries, bank, sales, dash, and VAT output. So your calculation is simple. You have your bank amount, which is 40614. Right? That's the total amount that is in your bank ledger. How is it broken down? It's broken down by sundries of 2830, right? Plus how much? VAT output of 2184, plus how much? Your sales of question mark. So you need to determine this question mark. How do you determine that? Well, our grade 7 equation 40614, if this jumps to that, it becomes a minus 2830 minus 2184 equals to your question mark there. So if you do your additions and subtractions there, you'd realize that the answer is going to be 25,600, which is equals to 25,600, which is solution A. Oh, sorry, solution 1. Solution 1. All right. So I'm going to erase this and proceed to question 11. Question 11 is the same principle, but now you are determining equity. So if you determine equity, you use the principle of the accounting equation. Assets equals to equity plus liabilities. Then you are going to group your assets, which is land and building, trade receivables. So those are your, so you take the totals of 800,000 plus 200, which is 1,000,000, equals to, you are trying to find equity, plus how much are your liabilities. You're taking off bank because it's unfavorable, so it means it's an overdraft, and you're talking about long-term liability. So this jumps to there, they become a minus, so it will be like the total of that 1 million minus the total of that equals to that. So your solution there will be 820, which is solution number 1, isn't it? So proceed to question number 12. Question number 12. You're given a table there. The amount of total assets in the accounting records. It's very simple. So you need to determine the total amount of assets. Identify what are the assets. So you're basically adding these figures for buildings at cost, equipment at cost, inventory, isn't it? And then what else? Income received in advance, the liability, trade payables, liability, short-term loan liability, long-term loan liability. Prepaid expense, it's an asset. So prepaid expense. So you get the figures there. You add the total. The total should give you what? 149, 123, which is solution. What number is this? 12. 149, where is 149 there? Oh, solution 3. So this is going to be your solution 3. Very simple. Simple stuff. Then you go to question number 13. Question number 13. Liabilities. Oh, very simple. We spoke about income in advance. It's a liability. You add trade payables. It's a liability. You add short-term loan. It's a liability. You add. Then you get long-term loan. It's also a liability. You add. And then accrued expenses. It's a liability. You add. So you'll be taking these figures from the table, and then you add them along. They should get you 121, 123, 100. This is a 3. This is a 3. 123, 100, which is solution 1. So what is an accrued expense? Maybe we can quickly discuss that. An accrued expense is, perhaps, let's take a good example, that you pay your rent at each and every beginning of the month. All right. So meaning on the 1st of January you're paying your rent. The 1st of February you're paying your rent, etc. And then it happens that on the 1st of December you decide to, like, or I'm saving for Christmas, I'm not going to pay my rent this time. I'm going to pay it in January, all right? And if the organization year end is December, right? It means that when it closes books, you are owing them how much? You are owing them 1 month's rent. But in their accounting records now, they are not going to say their rent expense that they are accounting for is for 11 months. No, they are going to say their rent expense is for 12 months, but the other month you owe, isn't it? Yes, you owe the other month, and that month that you owe, it's a liability because you owe them, you need to pay them. That's the accrued expense, isn't it? I hope if you need more clarity, you can obviously contact me by different ways. Then let's go to question 14. The statements that shows the net worth. Oh, this is also very simple. We don't need even to work it. So this solution number 4. You can read through about equity in your you can read through about equity in your study guide. Very simple. Question number 15, which is the last question. We have a sole trader who paid insurance of 6,500 with a check. Oh, sorry. Something funny happened there. Yes, paid 6,500 with a check. How is the transaction going to affect, not affect actually, how is the transaction going to be recorded in the ledgers? So if you pay an insurance, it's an expense. To increase an expense, you debit. So I want to find where they say debit insurance. Yes, and then we are using a bank, so to reduce an asset, you credit. So we want to see where they're crediting the bank there. So we have solution number 1. Solution 1. Okay, so it means that for today we are done. 30 minutes video trying to explain the assignment. Hope this is going to assist you in understanding the module, and I'll be uploading more videos. Thank you, bye.